Hello and welcome. I'm Nisha Poddar. On Too Sharp with ET, we have two news developments that you must know about today. Trump's tariff punch, how will it hit India? And Indian markets have a free fall today. US President Donald Trump's reciprocal tariff policy will come into effect hours from now on 2nd of April. Now, the United States will match the tariffs of other countries that they have imposed on its goods. India is amongst the countries with the highest average tariffs on US exports, remember. So it is directly in the firing line. Estimates suggest that India may lose up to $31 billion worth of exports to the US. That's almost, remember, 0.8% of India's GDP, says Emkay Global. Let's focus on which sectors will really feel the pain. Now, the US has slapped a 25% tariff on imported vehicles as well as components. India exported, remember, nearly $7 billion of auto components to the US just last year. Other vulnerable sectors also include, in our list, are textiles, gems and jewelry, electronics and seafood. Now, these account, remember, for a big chunk of India's US-bound exports. Even a 10% duty could really price Indian goods from the American market, and that could be a deterrent. India exports over $10 billion in generic drugs to the US, but they may be spared. Analysts like Nirmal Bang say that medicines are essential and may avoid steep tariffs. So can the Indian economy absorb this shock? That's the big question. Well, the US takes in around 2.3% of India's GDP in exports. That, remember, cushions the blow. Fitch and S&P say India's domestic demand can really offset part of this hit. Still, some pain is likely. Moody's projects growth could really slow slightly to 6.4% this year. Goldman Sachs warns of a 10 to 60 basis points of drop in GDP, but not a recession-level shock. The stock market hasn't taken this lightly, though. Export-heavy sectors saw a sell-off in the month of March. Autos, metals, and especially the tech stocks fell quite sharply. Big boys, Infosys, TCS, and Wipro lost 6 to 13%. Mid-cap IT firms like LTIMindtree fell nearly 20%. Investors fear a global slowdown or tighter US visa rules that could follow. So how is India responding? New Delhi responds with negotiations, not retaliation. Commerce Minister Piyush Goyal flew to Washington in March. Finance Minister Nirmala Sitharaman is going to visit the US shortly as well. Now, a US trade delegation has also been in India recently. India has made goodwill as well as tactical moves on this. It has lowered duties on US motorcycles, wine and whiskey. These were, remember, long-standing demands from Washington, D.C. But India is firm on farm tariffs. Officials say that opening up agriculture will hurt the millions of small farmers in India. And any deal that is there must protect their interest. So what's on the horizon? India and the US are working towards a new trade agreement. The goal is to expand trade to $500 billion by the year 2030. So now all eyes on Trump's Liberation Day announcement. Until then, sectors like auto and textiles brace for this impact. Let's talk about the Indian markets. They had a free fall in trading session on Tuesday. Sensex dived almost 1,400 points. Nifty crashed below 23,200 levels. One of the worst days that we have seen in weeks, triggered by the global fears, and we have seen domestic sell-off. Barring oil and gas as a sector, all the major indices ended in the red, with Nifty bank, IT, realty, financials, consumer durables all declining over 2%. So the big reasons for this mayhem. First has to be Trump's tariff tremors. 2nd April is just here. Trump calls it Liberation Day. Markets call it a big risk. Expected is sweeping reciprocal tariffs, not just China, but all major trading partners. Now, fear is that a global trade war could really choke the growth and hit export heavy sectors like IT as well as pharma. Markets are bracing for this. In fact, the extent of Trump's tariff will decide the next move, is what Geojit says. Number two is IT stocks. They take a hit as IT companies are heavily reliant on the US market. They fell up to about 5% amidst concerns over weaker demand coming in. Now, the sector has already lost 15% in the month of March and the March quarter, dragging the Nifty 50 lower. Third is oil near 5-week highs and Brent above $74 is a red flag on inflation trade balance. Rising crude eats into India's margins, adding pressure to RBI on rate path. And we have seen that profit booking was prevalent after the March rally, where Sensex and Nifty had surged. But traders are now cashing in. Valuations peaked, remember, triggering caution at that time. And FIIs also, from being net buyers, are pulling out due to uncertainty. What to watch tomorrow? Well, all eyes would be on Trump's tariff announcement, the scope, scale, and specifics. Mild tariffs, markets may bounce. Harsh tariffs, more pain ahead. Pharma as well as IT really could rebound if US spares key Indian sectors. All eyes on 2nd April and the Trump tariffs. With that, it's a wrap on 2 Sharp with ET. Thanks so much.